Welcome to Charts This Week, FOREX Focus. Quite a lot of turbulence going on, of course, with the Eurozone crisis, Portugal, Libyan war, Japan still, all these things conspiring with lots of news flow. But Forex is an extremely liquid market and it will digest these things very, very quickly into the chart. So the news will really not be of much help to you in the Forex market because it's such a liquid market that it's one of the most technical markets you'll find. And in fact, if we start looking at euro dollar, in fact last week at the end I was down on Wall Street with currency traders looking at the currencies just towards the end of the week, and a lot of really key moves in the last week. So let's just have a quick look. This is our roadmap really. This is the euro dollar chart, daily cloud. We're bullish, we're above the cloud. We really did hit this resistance level 142.50 last week. Didn't quite break this this high that we saw back in November, but we really did test it. So this is proving to be quite a hefty resistance level for euro dollar. We're bullish on the euro, but we do see resistance at this level at the moment. We possibly have to come back, test this cloud and test it again before we break. So it may not just happen straight away. We really do see resistance here, but the basing pattern does suggest that ultimately the euro is going to be the stronger currency, euro versus dollar. Hard to believe with all the news flow that you're hearing about Eurozone, but that's what the trend says. When we look at the 60-minute chart, we see then, because we've got the daily cloud being bullish, we're above the cloud. Here we see on the 60-minute chart, bullish short-term trend, then we get a little bearish one, short-lived. Only literally 4 or 5 trading days do we see these bear trends emerging in the currency. Another longer trend of 2 or 3 weeks on the 60-minute chart is where you're looking for longs, and now we're back into this short-term bearish move. So maybe this week we'll start to move back out of this range. We need to wait for the break above the cloud then we start to see bullishness again, and maybe this 42.50 level comes back under pressure. At the moment, the short-term position days ahead suggests a little bit of weakness on euro dollar. And if we look at the 1-minute charts, the 1-minute point and figure targets, just fantastic really. Here we see that we had upside targets given last week, 143.80, 142.80. We didn't quite get there. We sort of got to the end of the week, ran out of steam, new little downside targets of 140.60, 2 of them clustering at that level, and that's really where we closed the week out. So we ended up really where we said we would based on the targets. And we do have this downtrend in train. We need to see new price action kicking in this week to give us either new upside targets or new downside targets before we can really confidently get a feel for where the euro goes next short term. And if we go to the even more sensitive, this is a 0.005 chart. This is a really hypersensitive chart. We see the downside targets given towards the end of last week, 140.80, 140.85. We went slightly past that. We did find this previous level holding us at about 140.60. We do have a downside target of 139.95, and if we go lower, this thrust that we saw on Friday towards the end of the week, 138.70. So really do need to make sure that we don't make a new low, because we would activate that, and we've got the downtrend. So really need to see what the price action does on the opening this week to just get a feel. If we look at cable, this is really the key thing here. This thrust on cable off the low, back at 142.50, we thrust all the way, uninterrupted buying thrust to 160. So really we had a massive move there, and that move is then what governs the extent of the move from a point and figure thrust perspective. We see here we were breaking to 12-month highs last week. We had a short-term target of 164. You'll remember last week, that's exactly where we went to, and then we pulled straight back, come back to this 160 level, we come back to this sort of support level that we saw. So we broke, but it's not enough. We didn't stay there long enough to really say that we've broken out of this range. Similar to that euro pattern, until we really get conclusively breaking and possibly even support being tested from the other side. So we go higher and we come back and test what was resistance becoming support. So too early to call the break, but we do of course have the thrust targets in place. And 189, 181, these are the targets on sterling. This 181 target is new. If we're going to move above that 164 high we saw last week, let's say 165, if we get that move, that will then activate the 181 target. So really the call is if we go above 160, if we close above 165 on sterling, then we're into the 180s. Those are the thrust targets to watch for. We saw how the downside targets, and these targets have been quite good. Trend change also kicking in here, so really quite key. If we look at sterling short term, we see that in fact we had the weakness. So this was where we hit the 164 level exactly, and then we came back 162.70, 160.80, and then 158.80. So it says we will come back through this 160 level. But of course, as we go down this trend, the last one of these targets is quite often not likely to be the right one. The first ones will be more accurate, and then as you get further and further in the trend, the last push sell-off will give you a thrust, but we may then get a buying thrust reacting to it. So keep an eye for new price action giving us a signal this week. Here we see the dollar yen chart. Really quite key here. We just jumped with all the intervention that we saw a week or so ago, just over nearly 2 weeks ago. We come back on this 60-minute chart, and we're now testing the support. This is the level, this sort of 80 yen mark is what we really need to watch for support. So really need to see that held. We do have a thrust target. This was the target off the low. These are the thrusts off the low. When we saw that buying thrust coming in, we had thrust 83.30 is the current upside target, which we saw off a thrust last week, and it's activated, and the trend in place, lots of support there. So really we would expect that upside move. If we look at dollar Swiss, really quite a key chart here, really quite amazing the way we've, on the 60-minute chart, we've just fallen through on dollar Swiss. So really what's quite key here is that we do see some short-term bearishness on dollar Swiss. And this is really quite interesting. When we've been trending up, the RSI hasn't been giving us sell signals. When we've been sideways, we've been getting both signals both ways. Use the indicators when you're in a sideways range. When you're trending, the indicators will only give you bias to the trend. So they won't actually give you sell signals and buy signals as an uptrend. You'll just get oversold all the time. So use your indicators when you're congested. If we look at the targets on Swiss, really quite key. 118, that target was put in 2009. 121 was a target we saw towards the end of last year, and 140 was a target that was actually given last year. So these targets have been in place for quite some time. This is the medium-term picture, ties in probably quite well with gold. But then if we look at the short-term picture, remember we saw that 60-minute chart, we're rolling over, we have got some selling thrusts off the top, so we do have some downside moves. 107.20, 106.20 does suggest there's a little bit of downside pressure. Big story this really last week was Aussie. Aussie broke to a new, this is a daily chart, Aussie broke to a new high against the dollar. We really smashed this 102 level, and that's really quite key. We made an intraday high and we closed at a high. So dollar looking extremely bullish, having run sideways consolidation, looks like we're getting set to run again. The targets, this is the 0.005 chart. Targets you'll see here, these targets were given in 2009 at 97, and then we had another one given in the middle of last year at 1.005. That's where the congestion was. Now we've broken out of this congestion. 114 is the target. Aussie dollar worth $1.14 American. Really hard to believe, but that's what the chart says. And if we look at the short-term chart, this is bullish too. So here we see the thrusts, 103.30. 104.30 needs to be activated with a new, this is a 1 minute chart, so we just need to tick above it to activate it. So we've got to get above this 103 level really to activate the 104.30. But the trend is up. We can see here that look out for new price movement giving us some down targets. Keep an eye on the 1 minute charts. Here we see euro sterling. This is really one of the big stories. This great big, really like a 2-3 year consolidation pattern where euro sterling has just been going closer and closer and closer and closing right in. 2-year pattern really, and it's looking like here we're just starting to break, and a lot of people really starting to call the break, but realistically it's still a little bit too early to call. 2 days in the context of 2.5 year pattern, really hard to say. We've got the basing, we see really strong support here So this has been basing quite nicely, suggesting that it is going to turn to the upside, euro strength. And we do see the break on the cloud, but it's been congested. Really, 89 this previous high, 89.60 it was roughly, and 83.09 was the previous low. Let's say if we break out of the 80s, then fine, it's broken out and we're going back to parity. In the other way, if we go below 80s, then we've got targets down to the low 70s. So still too hard to call, really. We want to see this range broken, but it is looking increasingly. And of course, because of this consolidation, the RSI has worked fantastically well. This is the daily 14-day RSI. It's been giving good signals because of that range. And here we see the upside targets, the trend, the uptrend is suggesting the breakup, 93.50, 91.50 the targets, but we do have these downside ones as well. Really still a little bit too early to call the medium-term picture or the break. But then if we look at the 1 minute chart, 88.50, 88.90 targets that were given or thrusts last week, we got halfway there and ran out of steam. That's a little bit concerning that we can't get to the target. And we've started to give some sell signals as we've curled over and coming back towards support. Watch for price action this week. This pair, Euro Sterling, is one of the most interesting ones and a lot of uncertainty in it. If we look at Euro Yen, here we see the range on Euro Yen, 106, 115. Really in a range. So despite the intervention, all we've done is gone from the bottom of the range to the top of the range. That range has been in place now for a very, very long time. And then if we look at the 1 minute charts, we got targets of 116.25 and 116.15, so two thrusts off that intervention. But then we did see a sell thrust last week, pointing us back to a new low at 113.10. We didn't activate it, but a move below 114.50 would activate that downside target. Might see support at the low, but a little bit of a worrying picture here, very hard to call. So keep a very close eye on this chart this week. Euro Swiss really has been a one-way bet. Despite euro looking stronger against the dollar, here we see really the chart descending triangle. 127, 124 is the low, suggesting we're possibly going to move below that. And then if we look at EURNOK, the Scandi currencies all looking quite interesting at the moment. Little bit of a double bottom here. We've got to break this sort of fulcrum at about 795. So the NOK strength down at the base here, but euro strengthening back against the NOK. If we break this, then we're back to the top of the range. Really quite a tight range, of course, with the European currencies, but really one to watch. And then if we look at the 60-minute chart, here we see the move, the euro move, then the congestion again, starting to move through again. So suggesting maybe this week a little bit more NOK strength. And then we see the targets. This range really, really congested, so nothing very exciting in either direction based on the 1 minute targets. Last of all, I'm just going to take a look at a few gold charts. With the Swiss franc and various things happening in the global picture, gold is also a good sentiment indicator to keep an eye on. Gold made a new high last week, new intraday high. We're really breaking out of this big triangle here, this really ascending triangle, suggesting a big move up. Technically, it's a very bullish chart. We see the cloud above the cloud, really quite key. But on the 60-minute chart, we saw the trend in February. February was a great month to hold gold, but March has actually been quite a tough month. We had a little bit of a fallback. Because it's a counter trend move, the short-term trend down will be short-lived. We're above the trend here. We would hope that it would go on longer like this one, but it might well come under pressure, and we've got resistance to this high that was set a few weeks ago. So keep an eye on gold. If it breaks to new highs this week, then that could have implications, of course, for the Swissy as well. And then we see 14.59 as the upside target, but we did see a sell thrust. This is the 1 minute chart. We did see a sell thrust to 13.99, taking us back. So very interesting chart to watch this week if you're trading Forex will be the gold 1 minute chart. Just keep an eye on that chart. That's it for this week. I'll do my best to cover anything you like. Just fire me an email. Until next week, happy charting. See you then.